All right. Welcome, everyone. Thanks for joining us today, either this morning, afternoon, or evening, depending on where you are. We're excited to have one of our newer partners on today with us, and he's going to be going over how you can unleash your investment potential, showing you a lot of really unique and creative tools that we've recently incorporated into MetaStock as well. So we're really happy to have him on. Before we kind of jump into things, though, I'm going to do the real fun part here and just read through our disclaimer. So this demonstration, it's designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, trading strategies, or information provided in connection with the company. And so, yeah, now that I've got that out of the way, I want to say hello to Zahir. Thank you so much for joining us today and for agreeing to kind of come on and show us kind of what you've been working on and how you take advantage of the markets.
Thank you for having me. As always, it's always a pleasure to be presenting for MetaStock.
Great. Hey, well, I'm going to go ahead and make you the presenter here. So you should get a pop-up in just a moment, and I'll be kind of letting you take things from here. Everyone, if you have questions throughout, myself and Greg Lewis are in the background helping in both MetaStock and GoToWebinar. But it should be all you from here, Zahir.
Fantastic. So we're good with the screen? Okay. Yeah, all good. Fantastic. All right, fantastic. Great, guys. Thank you once again, MetaStock, for having me. Really exciting to be presenting what I'm presenting today, because there's been a lot of work going on behind the scenes with the tools that we have created. We've had these tools for a while, but we've now managed to create them for TradingView, for MetaStock, and it's just really happy to be showcasing the toolkit that we've created. So it's all about unleashing your stock market potential, building a winning portfolio with what we call the Complete Stock Market Toolkit, and it's particularly for retail investors. This is really the message here. As retail investors, we've got to come to the market with a real professional mindset, and hopefully this toolkit will be able to bring a real edge to what you're looking for. So let's dive in. First of all, what do all good investors have? I'd like to put this out to the crowd. I'd like to put this out to everyone who's on here today. If you can put some answers in the chat box, if you can just answer this question, what do all good investors have? I usually put this out to people and I get a whole different array of answers. So if there's anything that just pops into mind to answer this question, I think there's people in on YouTube as well. Obviously, I can't see the answers that are coming through from YouTube, but if there are, it just in your head, if there's anything that you think about. Okay, first answer that's come through, we've got a plan. Good, a trading plan is important, but more importantly, what's in the trading plan? So if we can go a little bit deeper, if there are any other answers that you guys could potentially come up with. So trading plan's a good start. Anything else? Sometimes people say things like risk management or trading psychology. These are all important, but there's something very specific that all good traders have, and that's what we're going to be breaking down as we go through the presentation. Capital. That's definitely a good start. We definitely need some capital. I think, it's a really good point, because people often overlook the sort of capital that you need. I reckon at least $20,000, £20,000 is a good starting amount. If you don't have that, then the first step would be to sort of save and get to that point where you are building up your capital. Okay, let's dive in. I'm going to give you guys the answers. The answer is an edge. Okay, all good investors have an edge. Now, what does this mean? What exactly is an edge? When an edge is defining high probability environments where you have more chance of making a profit than a loss. Okay, this is what I'm going to say this again. An edge is defining high probability environments where you have more chance of making a profit than a loss. Here's why an edge is critical, because if you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. You can see that last picture, that last icon, giving away your money. This is ultimately what happens. It's a win-lose game. So if you're not making money, someone is. So ultimately, there's a transfer of money there. So for retail investors, the most prolific way to identify an edge is technical analysis. This is just a flashy word for using charts to make your investment decisions. On the higher time frames, that's monthly, weekly, and daily, to identify and efficiently compound and maximize your ROI. So I'm going to say this again. For retail investors, the most prolific ways to identify an edge is technical analysis. This is using charts to make your investment decisions. On the higher time frames, monthly, weekly, and daily, to efficiently compound and maximize ROI. Now, why the higher time frames? Because the higher time frames are where the big moves are. Ultimately, where we do less work to make more profit, and where we can let our winning positions run and compound our winning positions. So it's all about moving your analysis and your investing, your trading onto the higher time frame. There's too much emphasis on 5-minute time frames, 1-hour time frames. It's just intraday noise. So we've got to move away from that, look at the bigger picture. So what are we looking for? Ultimately, what we're looking for is identifying trending stocks that are outperforming the index. Trending stocks that are outperforming the index. I'm going to be going a little bit more into what trending means, but trending stocks outperforming the index. So the S&P 500 is an average. It's an average of 500 stocks. So if you invest in the S&P, or if you invest in some kind of index fund, for example, you're going to be achieving average returns, anywhere from 7%, 8% to 9%, maybe 11% a year. It isn't bad. It beats the banking system, but we can do better than that. There are certain stocks that will match the average. There'll be some stocks that underperform against the average, but these are the stocks that we want to be able to identify and invest in. Stocks that are outperforming the indices. So if investing in the S&P 500 gets you, say, 10 or 11% a year, stocks outperforming the indices will get you 25, 30, 35% a year. And over the course of 10 to 20 years, the difference in your compounded returns will be in the millions. So we really want to focus on stocks that are outperforming the indices. These are what are known as trending stocks. So here's the thing, guys. When I understood as an investor that we need an edge and technical analysis to identify trending stocks, because in my early days, I did everything that everyone does. Day trading, it never worked for me. I went down the value investing route. I thought I would be Warren Buffett. I found that very difficult. Now, I'm not saying value investing doesn't work. It does work, certainly compared to day trading. But technical analysis and trending stocks has an edge over value investing in your early days when you want to grow your account. If you look at performance tables, you'll see people like Richard Dennis at the top of performance tables. Warren Buffett, he's more mid-table. It's his dividends payouts that are in the billions annually that make a big difference. So trending stocks will return you more than value investing. And that makes a big difference in your early years, your first 5 to 10 years when you want to grow your money. It's not about dividends payments. So when I understood that as an investor that I need an edge and technical analysis to identify trending stocks, I then created this toolkit that I'm going to share with you today, and my portfolio performance exponentially improved. Now, this is a journey, obviously, to where I am today. I didn't suddenly create it. I had to understand what the toolkit involved. And over my education period and through my early years, the toolkit has evolved into this complete toolkit that just does everything that I need. I am occasionally adding to it if I say, I need a new toolkit. But on the whole, for the last sort of 5-10 years, the toolkit hasn't changed. It's just stayed the same. The only thing that has changed are the stocks that I invest in. And that's crucial here. Every 12 to 18 months, there's a rebalance of my portfolio. And I go back to adding different stocks. And I'm going to be covering that as we go along. So a little bit about myself, guys. I just want you to know one thing. I've always been a bit of an underachiever in school. The reason why I say that is because when people look at where I am today, certainly a lot of my friends, look at where I am, then they'll go back to when I was a kid. And they'll be like, how have you achieved this? You didn't do much in school. That's true. I was an underachiever in school. And the teachers always said that I wasn't living up to my potential. In fact, I struggled so much that I felt like a misfit. Now, here's the thing, guys. I wasn't stupid. It's just that I was very rebellious. I didn't really like the idea of it conforming. From a very young age, I understood that this isn't who I am. And so I used to get myself in a lot of trouble. But it's worked out well in the end because, on this journey, I've evolved to who I am today. And so, look, this is just me. Look, we can have a little bit of a laugh. The kid on the left, that's the underachiever I was talking about with my nerdy NHS glasses. Really good at sport, by the way, really good at chess. I love chess. I was a chess captain. I played a lot of cricket, basketball, football. I was really good at all of that kind of stuff. So anything where I was allowed to let loose and, you know, be my own boss, particularly with chess, I loved it. Education, yeah, I found it difficult. Guy in the middle, that's me. I graduated from university. Now, here's the thing. I got a 2-2 at university. I don't know where you are in the world, guys, but a 2-2 is pretty much second from bottom. Third is what you get when you just about graduate. 2-2 is just off a third. So even in university, that smile that you can see, that is just more of a relief that I didn't get a third and that I got a 2-2. So I got a degree in software engineering, by the way. And the day I graduated was the best day of my life because I studied software engineering for 4 years. It's a really, really long time when you have no interest in studying something that's just, you know, it just didn't resonate with me. But I graduated. And with that degree, you know, I managed to do some interesting things. But ultimately, the person you see on the right, that is who I am today. And through this journey that I've gone on from learning to invest, I now contribute to a lot of wonderful publications. There, of course, is MetaStock. You know, MetaStock, we've used the scanners for a long time, but this partnership with MetaStock has come about in recent months, and we're really, really proud of the relationship that we've got with MetaStock. But again, I'm a regular contributor to Benzinga. Pepperstone flew me out to Dubai to do a presentation earlier in the year, so you know, you can call me an international speaker now. All the other wonderful publications you can see there, I've done webinars for, live presentations, I write for on a regular basis. So I've gone from being that eternal underachiever to where I am today, which is ultimately a spokesperson for trend following and a real advocate for retail investors to take control of their situation. Now I'm the co-founder of Sublime Trading, the Phoenix Academy, which is our education arm, and these tools that we've developed for MetaStock, they're all part of the education arm that we have here at the Phoenix Academy. And I now also have a fund. We've recently gone through a rebrand. Some of you guys may know that I had a fund called the Griffin Fund. That's now called the Reversey Fund. And here's the good news, guys. The fund is now incorporated in Luxembourg. So we now have an official fund. This isn't just some small PAM service that we had earlier in the year. This is a full-on fund where we can onboard people from all over the world. So we're really, really proud of that. That's just gone live in this month, earlier this month, actually. So we have called it the Reversey. The Reversey Fund. Revolution and legacy joined it together because those are really the two words that really encapsulate everything that we're doing here at Sublime Trading. Revolution, it's all about evolving and being this person that you want to be. Legacy, making sure that you leave something behind for your loved ones, because people are behind, guys. Not everyone is where they want to be in terms of their financial future. So Reversey, revolution and legacy, we put the two together and we called it the Reversey Fund. So fund management is what we do. Do check out our Trustpilot as well. We have some of the best private investors, retail investors in the world because of the education that we've given them, the toolkit that we've given them. Some really, really happy people. And a lot of these guys have lost money through other courses. They've lost money through their own investments and they're behind. Now they're really on top of their future and really happy members of our community. So do check out our Trustpilot on Sublime Trading on Trustpilot. And again, all because I learned to invest correctly in the stock market, I am where I am today. So here's the question that I want to answer today. Is it possible to get consistent returns from the stock market, returns that outperform the indices and other investment opportunities from the comfort of home in 60 minutes a week? Now, here's why I say that. Everyone is busy. You have a job, you have a career, you have businesses, maybe you're married, you have kids, you have a lifestyle, hobbies, friends, all of that good stuff going on. What you want is to be able to get on with that, but have smart processes working away in the background, compounding your hard-earned money. You don't want to give up life to be a good investor. And here's the thing, you don't need to. With the technology available, brokers are online, the tools that we've developed for MetaStock, you can do everything from the comfort of your home in minutes a week. Of course, there's an education phase, which will take a bit of time, but once you're in the rhythm of this, it literally takes minutes a day, minutes a week to manage your portfolio and achieves fantastic, fantastic returns. So answer, yes. And this is the toolkit that I'm going to go through today. This is the toolkit that will help you do it. First of all, let's start with some numbers, guys. Okay, so let's say everyone on this webinar, this workshop has an initial investment of $20,000. It really is the very minimum that you need, because with $20,000, things can get exciting. Okay, $20,000. Now, let's say your desired amount is $1 million. You want to grow 20,000 to $1 million. You can add a further $100 a month to this pot. and you want to achieve this in 20 years. So that's a good life. That's a good horizon, time horizon. If you want to achieve this in 2 months or 2 years, good luck, guys. But if you're going to give yourself 10, 15, 20 years to achieve your returns, what you will achieve will blow your mind. And when you look back with your cigar in hand, looking back at what you've achieved, ready to pass this on to your loved ones, your kids, you'll be extremely proud of yourself. This is the legacy that you want to achieve. Here's the thing. You need a return of 19.78% annually to achieve these numbers. 19.78% annually. So how are you going to go about doing this? Well, let's reverse engineer the process. Banking system gives you less than 1%. Forget it. S&P 500 tracker fund, 7% to 11%. Not bad. Certainly better than a banking system, but not great if we want to be hitting 19.78%. Hedge funds, 5% to 15%. Unless it's our hedge fund, Reversy, guys, I would say you don't need a hedge fund, right? You can do this yourself because ultimately you're giving your money away to someone. What you want is a hedge fund that's going to be getting you over 19.78%. If that hedge fund isn't doing that, then that isn't a hedge fund that you want to be aiming towards. There is a hedge fund out there, as I said, I've given you the name already, but in terms of keeping money under your control, you don't need to be doing that. Real estate, 10% to 11%. Everyone gravitates towards real estate because that's what we're told. Real estate is where it's at. Look, a house is a house, fine, no problem, but don't limit yourself to real estate. Wine, interesting, 13 to 14% a year. Even whiskey, I've been looking into whiskey. I'm not a whiskey drinker. I like a little sip now and then, but I'm not a drinker at all. It can get you 15% a year, depending on if you know about your whiskey. So certainly an interesting investment. Here's the thing, guys, trending stocks that are outperforming the indices, 30% plus per annum over the last 10 plus years. This is what we've achieved in our personal portfolios, some of the results that we've shared as well. So here, 2020 to 2021, we made an 86% return between 2020 and 2021, 86% return, using the toolkit that I'm going to be showing you today. 2022, as you know, the S&P 500 dropped 28%. We limited our losses to less than 6%. So we still outperformed the index, even though it was a down year for us. This is the way it is, guys. You can't expect to make profit every year. You have to maximize the market in periods of trend, but you have to always protect your losses in down markets. So between 2020 and 2021, we made 86% return. Last year was a less than 6% loss. For the last 3 years, we've outperformed the index. Here's the thing, 2023, we're now in the very early stages of putting our portfolio together. So we're starting to come out of this period of loss that we were in last year, and we're starting to move into profit. Here are some of the stocks that are currently in our portfolio. Now, look at the ticker symbols, the brand names, the names of these companies. I'm sure some of them you haven't even heard of. Arch Capital Group, it's up 32% this year. Hubble, it's up 42% this year. Quanta Services, it's up 52% this year. AmerisourceBergen, it's up 22% this year. Again, these are stocks in our portfolio and stocks that we found using MetaStock and the tools that we have developed. So what does this tell you? What this tells you is that everything that you need is within your hands. You don't need data feeds. You don't need to be on news channels. In fact, you need to be turning all of that off and focusing on what the charts are telling you, because that is where the money is. And let me tell you this, guys, the money is in the stocks not talked about on our media channels. Arch Capital Group, never hear about it. AmerisourceBergen, never hear about it. Quanta Services, you don't hear about it. Hubble, you don't hear about it. So stocks that are not in the media is where the money is. Okay, so what is a trend? The definition, the general direction in which something is developing, the general direction, so the long-term direction in which something is developing. In the markets, you have bull trends, you have bear trends, and you have a sideways market, which is known as a consolidation. Don't underestimate the power of a consolidation. You don't want to trade consolidations, but what a consolidation is a base for the next trend to develop. So if we can find stocks that are consolidating and then enter on the early breakouts, those are when we can catch trends very early. So consolidations, think of them as roots of a tree. If the roots of a tree are strong, the tree will grow strong. So if the consolidation is long, the trend that will come out of that consolidation will be long. You've heard of the expression, longer the consolidation, bigger the breakout. So appreciate what consolidations can do, but don't trade them. The two most profitable environments are bullish trends and bearish trends. And that is a fact, guys, right? People may want to argue with you about it, but it's a fact. Bullish trends and bearish trends are the two most profitable environments. Consolidations are generally where people lose money. Now, here's the thing, guys. I've gone back to 1990 just to create this table. Since 1990, the last 23 years, I put a question mark there because we're still going through 2023, but the last 23 years have been bullish. 4 years have been bearish, and 6 years have been sideways market. So what does this tell us? That even though we hear a lot about market crashes and there's always a lot of fear mongering in the news, 23 years have been bullish since 1990, and we've had more sideways markets than bearish markets. So in fact, the bear markets are the least likely to appear. So we need to really be focusing. We need to always have a bullish bias, but we then got to be able to switch between bearish markets and sideways markets if needed. We don't want to be perma bears and perma bulls. I hate these terms. They don't mean anything. It just means that you don't know what you're doing and you're favoring one market all the time. What you want is to flow between the natural cycles of the market. But more importantly, you always want to focus on bullish trends because that's generally what the market does. Here's the thing. Even though the market is always bullish, there is another element that comes into it, and that is sectors. There are 11 sectors in the stock market. And this is where MetaStock really comes into its own. MetaStock as a scanning software is beautiful because what it will do is we subscribe to the philosophy that you always want to find the strongest stocks in the most robust sectors. And every 12 to 18 months, there tends to be a rotation of money from one sector to another. So right now, we hear a lot about IT and AI. And there are some good stocks that are in the AI sector, NVIDIA, Apple, Microsoft. We're going to be looking at that. But you don't want to get obsessed with those sectors because there will be sectors that are performing very well that no one talks about. Right now, industrials is doing really well. Quanta Services is an industrial stock. Hub is an industrial stock. Consumer discretionary, consumer staples, they're performing fairly well as well. So you want to have MetaStock because it can scan and shortlist. So it'll go through 15,000, 20,000 stocks, and it will give you an initial shortlist of say 100 and 150 stocks that meet your criteria. Once you've got the 150 stocks, you can then put them through the tools that we've developed and find the best 5 to 10 stocks that make it into your portfolio. So we have, again, we've developed a scanning script for MetaStock. I'm not going to go through that today because that's not what today's about. Today's about the tools, but we have developed a whole scanning section for MetaStock as well that scans breakouts, that scans pullbacks. It's a fantastic bit of kit that you guys really should explore. Okay, now here's the thing, rotation between sectors. As I said earlier, money tends to rotate every 12 to 18 months between these sectors. So we need to stay on top of the sectors and understand where the money is at any moment in time. We don't want to get bogged down with just AI or one particular sector. It doesn't work that way. We want to be like a falcon. And what I mean by that is a falcon will soar above the air. It will spot its food, go down, have a feed, go back up into the air. A falcon is not going to hang around in barren land. And that's the way we want to think about ourselves as investors. We're not going to be hanging around in sectors that are barren. We want to move to the sectors to where the money is. So think like a falcon. Look above, look down. Imagine the sectors all below you. Spot where the money is. Go down, have a feed, usually for 12 to 18 months. Go back up, repeat. Okay? That's how we are as investors. And that's where the technology comes in today. It's beautiful. So just an idea of some of the sectors we have invested in over the years, going back to 2017, we of course had to deal with COVID-19. One thing about COVID-19, guys, notice that the sectors that were booming before COVID-19 were the same sectors that were booming after COVID-19. Generally, what happens before a black swan is what continues after a black swan. It just gets absorbed into the market. So a black swan is this really scary thing that can shake the market for weeks and months. And then once it settles back down, what was happening before is what continues after. Notice 2023, consumer discretionary. We do have some IT stocks, NVIDIA, for example, Apple in our portfolio, but industrials are really running things at the moment in terms of where the money is. Okay, here's the thing. Don't get it twisted, guys. The odds are not stacked in your favor at all. As a retail investor, the market is designed to take money away from you. There's this battle. You hear it all the time, the dumb money versus the smart money. The institutions consider themselves the smart money, although that's very debatable. The dumb money are what they consider us, the retail traders, particularly day traders. They're taking money away from retail investors and keeping it for themselves. We want to ultimately think like the smart money, which means we have to align with the smart money and piggyback off the big dogs. We want them to do all the hard work. We want to jump on their back, piggyback the ride. Let them create the trends. We ride the trends. So here's a quick comparison. I mentioned earlier about technical analysis and fundamental analysis. Well, fundamental analysis and technical analysis. Here's the thing about fundamental analysis. It's suited for institutions. They pay a lot of money to get news early. They combine it potentially with technical analysis. They have whole floors of analysts to go through the data. They have vast sums of capital, billions of our money, right? Positioned well to profit from this combination of technical analysis and fundamental analysis. They pay tens of thousands of pounds for terminals like Bloomberg terminals and Thomson Reuters terminals to get news early. So by the time we hear it, the retail trader, it's old. Even if it's seconds, it's old. It's already factored into market. So we don't want to be like them. For us, that approach is difficult. It's time consuming. It's just a false economy. We want technical analysis. Here's why. It's suited for busy everyday people. It's simple to learn and execute. Here's the thing. A lot of people think that financial literacy is difficult. It isn't. It's really, really simple. What we want to know is it the right time to invest? What do we invest in? And how do we invest? Is it the right time to invest? What do we invest in? And how do we invest? That is all down to technical analysis and a strategy. It's simple to learn and execute. It tells us, here's the beauty of technical analysis. It tells us where the institutions are. So when we can start seeing the trends appear, that's where the money is. It takes minutes a day, a week to manage your portfolio. It allows us as retail traders to position ourselves to capture these long-term trends. And here's the thing, guys, it's a repeatable system that we can stick to. It's repeatable. We can do it again and again and again for years on end. The reason, a big reason as to why a lot of retail traders fail is because they don't have a system that is, first of all, that has an edge. And secondly, it's very difficult to repeat. So if we can combine that, if we can have a proven edge and it's simple to learn and execute and it's repeatable, it's a win-win situation. That goes back to what I was saying earlier. We can keep on working, keep on living life, but we have all of these smart processes working away in the background, compounding our money, taking minutes a day to manage. Okay, that really there is what I wanted to cover in terms of laying the foundation. Let the institutions do the hard work. We just need to identify the start of trends and piggyback the ride. Simple, smart, and lucrative. To identify the start of trends, this is where the Complete Investor Toolkit comes in. So guys, let's dive in. I'm going to just switch my charts over. So I will need some clarity on whether I am sharing the chart, the correct screen. So just bear with me a second. Okay, Bobby, could I get a thumbs up, please?
Yeah, I'm seeing that stuff.
Brilliant. Okay, fantastic. So let's dive in. So guys, this is my 4-screen setup. Every single stock, commodity, or currency that I analyze goes through this process. So everything you see here are the tools that I have used for the last 10 plus years to identify assets, manage, shortlist them, and then put them into my portfolio and manage them. So what do we have? In the top left, we have the monthly time frame. You can see there it says monthly. In the top right, I have a weekly time frame. In the bottom left, I have a daily time frame. And in the bottom right, I also have a daily time frame. So I have 4 screens. I do my analysis on the monthly, the weekly, and the daily bottom left. And in the daily bottom right is where I get all the values that I need and put them into my broker account. So let's start with the monthly time frame. I'm looking at the chart of Apple. So what do I look for with Apple? Well, first of all, when I look for a stock, I look for a good performance history. So we can look at Apple. It clearly has a good performance history. We're looking for stocks that have moved up over many, many, many years. I look for stocks with at least 5 to 10 years of history. Apple has a very good performance history. Now, you'll notice that I've got some levels here. This green line here at the top and this red line here at the bottom. This is the high of last year and the low of last year. These are crucial levels. Assets that are trading above their highest point of last year are starting to break out and move into trend. Apple, you can see now, only last month, it broke above its previous all-time high, and it's now starting to move to the upside. This is why Apple is now in our portfolio. It's one of the newer assets that are in our portfolio. You will also notice that there are some green lines and some red lines. I think I may need to make these a little bit thicker for you guys, but ultimately, these little diamonds, green diamonds, red diamonds, these are proven levels of support and resistance. So what the software is doing is that it's automatically detecting these proven levels of support and resistance, and it's detecting the highest point of last year and the lowest point of last year, and it's automatically plotting that for you. So it's doing all the work. A lot of people now that have free software, they're drawing these lines on manually, taking a lot of time in their day to do that. Forget it. Let the software do all the boring stuff. You need to do all the important stuff, which is make the right decisions on which stocks are going to your portfolio and then manage your broker account. Okay. Now, sorry, my mind's gone blank here. I was going to say something. What was I going to say? Oh, that's what I was going to say. The logic behind the support and resistance levels. I'm not going to do them right now because there is a logic that goes into these. There's an algorithm, there's a formula. These are all explained in a video syllabus that accompanies these tools. Okay, so I'm just going to give you a very high overview, but there's a video syllabus that comes with this that explains the algorithm. So this isn't a black box system, guys. There's complete transparency in the algorithms and the logic behind these tools. Okay, so on the monthly time frame, we look for a history of trend. We look for a period of consolidation. We look for a breakout from consolidation. We look for price to be breaking above the highest point of last year. And we look for the current price action to be above all these key levels of support and resistance. Apple, you can see that. It's a very good looking stock. It's meeting all of that criteria. Now, let's move to the weekly time frame. Now, on the weekly time frame, we have minor levels of support and resistance. So on the monthly, we have major levels of support and resistance. On the weekly and the daily, we have lesser, still important, but lesser levels of support and resistance. You can see they're all being highlighted on here with these horizontal levels. Now, if you notice the colored bars, we've got periods of green, we've got periods of red, and we've got periods of this sort of light blue gray. Green is where the market is in a bullish trend. Red is where it's potentially starting a bearish trend. Gray is where it's going through a sideways market. Notice what is happening right now. Apple is trending. See how the trend filter is green? It's been green since March. The trend filter has been green since March. So what that's telling us is that Apple is now starting to move into a bullish trend. It is meeting our criteria. It's broken out of consolidation and is starting to move to the upside. So again, looking very, very interesting. On the daily time frame, now the way to look at this is that weekly is big sister, daily is little sister. Whatever big sister is doing, we want little sister to be following. So if we go onto the daily time frame, again, we've got all the minor levels of support and resistance. I mentioned earlier that on the monthly, we have the major levels. On the weekly and the daily, we have the minor levels. Again, all the software is doing it all for you. It's detecting these levels based on an algorithm, all explained in the video syllabus. It plots those for you, so you don't have to worry about it. All you then need to do is figure out whether Apple is trending or not. Look at what it's doing. It's broken out of consolidation. The trend filter, similar trend filter, green for bullishness, red for bearishness, gray where it's in a sideways market. And then when it starts trending, notice how it's just remained green. So what we have is alignment between the weekly, the daily, and the monthly time frame. When all three time frames are aligned, we have our edge. And this is when we can start looking to take positions. How do we take positions? That's where the daily in the bottom right comes in. Let me just move this out of the way. The daily in the bottom right. So if I open up the daily in the bottom right, look at the daily in the bottom right, guys. First of all, it's highlighting all the entry points. See the green arrows? It's telling you enter, 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 enter. Notice that it waits for a trend to be confirmed, and then it starts giving you entry points. So these green little arrows are entry points. Now, along with each entry point, what you will also get is, if you look at the blue, it shows it for the most recent entry point. You've got the green line, which is the entry point, 19878. That's where you enter. That's the level you put into your broker account. There's a stop loss at 182.63. And you've got your risk-free level at 214.94. So the software, again, based on algorithms, is producing entry points, stop losses, and risk-free levels. All you need to do is take these levels, understand, again, in the video syllabus, how the entry point is being created, how the stop loss is being created, take those levels, put them into your broker account. And here's the beautiful thing, guys. See this dotted line across the bottom? This is your trailing stop loss. This is your exit management. Look how well it manages the stock. Because the thing about exit management is, here's where people struggle. Everyone seems to enter into an asset, a stock, based on some logic, fundamentals or technicals or both. People enter into a stock. Where they struggle is with the exit. And ultimately, the exit is more important than the entry, because the exit will determine how much profit you leave with or how much loss you take. And you always want to keep your losses minimal and your profit exponentially large. Cut your losers short, let your winners run. Everyone understands it, but it's not very well practiced. So we need the tools that allow us to do that. So the trading stop loss, guys, imagine if you entered this position back in February on this green arrow, you would still be in that position based on the exit management and the trading stop loss. So this is how we achieve the 86% return that I talked about earlier, and the 30% average that we've achieved over the last 10 years is by using MetaStock to scan the market, going from sector to sector to find the best stocks, using these, once we've got the initial shortlist, we've gone from 15, 20,000 stocks down to say 200 stocks. We take those 200 stocks, manually put them through this filtration that we're going through now, find the best 5 to 10 stocks, take those stocks, put them into our portfolio, and then use this daily in the bottom right to manage our positions. Really, really simple. Let's go on to another chart. I've just got a bunch of charts that we can go through. Arch Capital Group. I'm going to go through it quite quickly. Arch Capital Group. Look at the history, guys. Really good performance. This is monthly. So if you look at the bottom, we're going back to 2009. Really solid performance history. If you look at what it's doing now, pushing to the upside. Look, it's above the highest point of last year. It's above all the key levels of support and resistance. It's proving itself to be a very, very good stock. If we look at the weekly, the trend filter is green. It's above all the key levels of support and resistance. It's above the 50 and the 200 simple moving averages. This is the other thing I forgot to mention, guys. A bullish bias, stocks above the 200 SMA on the weekly and the daily are stocks that are bullish. Below the 200 SMA, the bias is bearish. So stocks are very much bullish. At the moment, there's, I think, something like 62% of stocks are trading above their daily 200 SMA. That's more than half of the stock market is trading above the daily 200 SMA. That's a strong indicator, and that percentage is increasing all the time. It's a strong indicator that we are in a bull market. Okay, if we go to the daily, again, above the 200, the 50, I also have the 20 SMA on the daily time frame. Trend filter is green. If you look at it from this gap here back in October, it's predominantly remained green. There's bits of gray, which can happen during the pullbacks. That's fine. But overall, it's green. It's a very, very strong bull market, bull trend. And then if we go to the daily in the bottom right, entry points, entry. So think about it, guys. If the first position is an entry point, these other entry points here, these are all compound positions. So this is where the software is telling you to buy more, buy more, buy more, buy more. Notice, look how well it stays out of a correction. When the correction is confirmed, we start getting entries again. Recently, we've had an entry. Here's your entry point. Here's your stop loss. Here's your risk-free level. Again, look how well the stop loss, the trailing stop loss, manages the position. Here it got triggered. That's okay. Eventually, it will get triggered. Now we're going again. All right, so that's ACGL. Let's have a look at another stock. Which one is that? Forget that. Hubble. Let's have a look at Hubble. This is a stock that I mentioned earlier. Again, performing really, really well. A good history of performance. Trading above the highest point of last year. Moving really, really well. Above all of those key levels of support and resistance. If you notice, all the diamonds are below price action. That's what you want to see. The diamonds are below price action. That means we are in a bull trend. On the weekly, above the 200, above the 50, the trend filter is green. Bit of a bearish day today. I think earnings was out today, which is why we, a bearish week. I think it's because of earnings, but that's okay. We have to ride out these periods. It happens. We can't expect the market to just continue shooting in our favor. Again, daily time frame above all three moving averages. The trend filter is green. Currently going through a bit of a correction. No problem. We just got to apply patience at this point. And on the daily, in the bottom right, entry. Currently going through a bit of a pullback. That's okay. Let's see how the day ends. Price is likely to find an area of support, start moving its way back up again. And this is really where the psychology of good investing comes in. As soon as this sort of pullbacks come in, people panic. But where people are panicked, that's where good investors remain calm, wait for a support level, and start buying back into the market. You have to always do the opposite of what the market is doing. Okay, let's go through one more stock. I'm just conscious of time. Let's go through one more stock. In fact, let's go through McKesson Corporation. So McKesson Corporation, again, this was a stock that moved up 60% in 2022 when the S&P 500 fell 28%. So you can see sector rotation. When we made the 86% return between 2020 and 2021, that was mostly in tech stocks because of COVID, everyone was online, tech stocks were booming. End of 2021, start of 2022, money rotated into healthcare and energy. And this is an example. McKesson Corporation moved up 60% when the S&P 500 dropped 28%. So this is the beauty of using stocks, using software like MetaStock to scan sectors. Okay, on the weekly, trend filter is predominantly green, a little bit of gray here during the correction, but overall it's been green. And on the daily in the bottom left, the trend filter is currently in a bit of a consolidation, green and gray. That's okay. Overall, though, if I just compress the chart, you can see a very clean trend to the upside, little bits of correction, sideways market here, but it's now starting to move to the upside and potentially start creating this new trend in the market. And here in the daily in the bottom right, you can see all the entry points being produced. Last entry point, we had the entry, the stop loss, the risk-free levels. You take these levels, put them into your broker account. Notice, guys, current correction that it's going through. Look how far the stop loss and the trailing stop losses are. This is why we don't get stopped out of positions prematurely. We typically hold positions for 12 to 18 months, and then we rebalance and take our profit. Okay, so that's the toolkit, guys. Everything that you need to identify top trending stocks, whether you want to take a stock because it's time to invest, or whether you want to stand aside. Hey, your friend or your plumber or your barber may say, hey, listen, guys, check out this stock. You really want to invest in that? Oh, yeah? Fire up your meta stock, fire up the tools, and make up an objective decision based on what the market is telling you, not what opinions are telling you. Opinions are a classic way of ending up on the wrong side of the market. Okay, so that's a quick showcase of what we are doing here with Sublime Trading and how we're partnering up with MetaStock. We've made all of these wonderful, wonderful tools that are now available for MetaStock. So let me just switch back to the slides. I think we're good for the slides. Could I just get a quick thumbs up, guys?
It's good.
Yeah, it's fantastic. Okay, so let's just move on. So here, I just quick, once again, guys, the 32% on Arch Capital, 42% on Hubble, 52% on Quanta Services, 22% on Amerisource. All of these, you can see how I ended up in these stocks based on the presentation that I have done today. All have been found and selected through the scanning process, then putting the scans through the tools, shortlisting those, and coming up with some wonderful, wonderful stocks that just don't get any media time at all. Now, here's the thing. This is your edge. Everything that I've explained earlier, monthly, weekly, daily, if you cannot define your edge, you do not have one. Remember that, guys? If you cannot define your edge, you do not have one. And if you don't have an edge, you will get eaten by someone who does. The tools that you have just seen are all clearly explained as a checklist system. So on the monthly, we look for this. On the weekly, we look for this. On the daily, we look for this. If the checklist is met, we take a position. If the checklist isn't met, we stand aside. The tools that you've just seen are basically created to meet this checklist. Again, this checklist is all explained in the video syllabus that accompanies the tools. Okay, so the toolkit aligns you with the market. This is really, really important. Don't predict the market. Don't second guess the market. Don't go against the market. Let the market lead. We follow. We keep it simple. The trend is your friend until the bend at the end. Again, people know these mantras. They just don't follow them very well. With the toolkit, you can apply the 3 C's to trend following. Clarity, control, consistency is that sweet spot in the middle where the money is. If any one of these is missing, you won't make money. We've got to find that sweet spot in the middle. Clarity in when to enter and exit the market. You've got to know that. Control in choosing the best stocks and assets. I say assets because this logic you can apply to commodities and currencies. You can bring up the chart of gold, apply the logic. You can bring up the chart of the euro dollar, apply the logic. Control in choosing the best stocks and assets. Consistency in maximizing profit and ROI. recycle the process again and again and again. Now, the Complete Investor Toolkit, everything that you've seen, including a video syllabus that comes with it, we are pricing this at $199 a month. But here's the thing, guys. This is the first time we're going live with this toolkit for MetaStock, something we're very proud of. So early adopters, we are going to give you this fantastic price of $99 per month for life. That's with a 50% discount. Once this starts gaining traction, guys, we're going to start putting up our prices because we know how valuable this toolkit is. These are the kind of tools that people need, retail investors need to have the returns that they want, to create that portfolio, to create the legacy. So over time, we will start putting our prices up. For early adopters, for MetaStock, and for these tools, we will be giving you for lifetime access at $99 a month. And we will promise that we will never put up our prices once you have got these tools at $99 a month. You can ask our current community members, the ones that joined Sublime Trading in 2018, lucky guys, have got some of the best prices that they will ever find for any community, guys. Complete Investor Toolkit for you guys, $99 a month. To register yourself for the toolkit, guys, go to sublimetrading.io/metastock-toolkit. I don't know if I can put this in the chat box, but I will try. All right, there you go. I have put it in the chat. I think you guys should be able to see the link there. Okay, and here's the thing, guys. You've got some wonderful bonuses that go with it as well. You've got a portfolio accelerator call with myself. So everyone on here, you get a free 30-minute portfolio accelerator call. So we can look at your portfolio, how it's performing. Even if it's a cash portfolio, still a portfolio. We can look at it, look at what you're doing, and we can then look at how the tools can help you to start moving forward. So you get a free call with myself on your portfolio. I call it the portfolio accelerator call. You get the ultimate stock market blueprint. So a really good download of breakdown of how MetaStock and these tools flow through the whole process. You get the complete methodology PDF where our strategy is explained at the back. So you can take the toolkit, you can read the strategy at the back. This is my first attempt at a book, guys. Don't laugh. Okay, it still hasn't been completed yet, but it's a fairly decent download. The most important thing is the strategy is at the back of the book. So you want this. You will get this for free as well as a bonus. And you get the wealth calculator. So the calculator that I used at the very beginning where we calculated the 19.78% return, we will give you that calculator so you can stay on top of your goals throughout the process. And you get an exclusive bonus training that I did for members of the Entrepreneurs Organization, all 7- and 8-figure business owners. I did a presentation for them. You will also get free access to that presentation. So once again, guys, go to sublimetrading.io/metastock-toolkit. I put the link in the chat box, $99 a month. This isn't going to be available forever, guys. I can tell you that we will start moving to $199 a month in the very, very near future. But early adopters, for sure, $99 a month, you will get that for life. There we have it. Over to you, Bobby. Any final questions? I think we've got maybe 10 minutes, plenty of time.
Yeah, great job, Zahir. That was really informational. Really liked watching you present today.
Brilliant.
Let me
see some stocks if people have any stocks to showcase the toolkit a little bit more. So if there are any questions.
Yeah, I know earlier we had a question, but I didn't want to interrupt at that time. But somebody was asking if and how you utilize candlesticks in your analysis.
Yeah, so you can see that right there. Candlesticks are a very, very important part of our analysis. So we look at candlesticks, monthly, weekly, daily. You can see right in front of you. It's all candlesticks.
Yeah,
let me
we do still have your slide show up.
Yes. What's going on here? My screen's going a bit funny. There you go. So if I just bring up MetaStock again. Yeah. So as you can see, it's all candlesticks, monthly, weekly, daily time frame. Can't get better than candlesticks when it comes to looking at charts.
All right. I don't see any other questions coming in on YouTube. So I think we're good there.
Guys, you've got 10 minutes on my time to pick my brain. Use it. There's a lot of information here. Either I've answered everyone's question and that was the perfect presentation, or no one has any questions. I mean, you know, it's got to be one or the other, right? And it certainly can't be. Thank you. Yeah, I don't believe that, but thank you anyway for the compliment. I know doing the presentation, I was all right. Oh, okay, thank you.
Yeah, great. I think that I guess we could kind of wrap things up. We were able to share that link on YouTube as well. Oh, actually, it looks like we just had a question come in. Yeah, so it actually came into the go-to webinar. Can you provide an analysis on Symbiotic, Adidas, Adobe, Amazon, Caravan?
Okay, is this a portfolio accelerator call? Okay, I'll tell you what. Let me just pick the obvious ones there, right? So Amazon. Oh, doesn't seem to be coming up. What's going on here?
If you click all public symbols, it'll give you down just a little bit and to the left.
Yeah, my bad. Thank you.
That would be searching by name, so you'd have to change to name right above.
Let's do a symbol. ZN, yeah. .o, I believe it should be. Yeah, there we go. Sorry about that. Okay, so let's just do a quick analysis of Amazon. A really good example of a stock that you don't want to be in, but people tend to buy into it simply because of its brand name. So there's a time to be in stocks and there's a time not to be in stocks. When a stock is trading between its high and its low of the previous year, that is a consolidating market. Now, of course, there's plenty of space to the upside, but the challenge is that we're looking at a stock in real time, not in hindsight. In real time, you have to make an objective decision, and you've got to say to yourself, well, what are the chances of this stock just going sideways? And the chances of this stock just going sideways is very high because it's already going sideways. It only stops going sideways when it stops going sideways, when it shows us that it's going sideways. And that's when it actually breaks out, starts printing new all-time highs. So for me, based on this logic, Amazon isn't a stock that I would look to get into. If you look at the weekly, notice the trend filter is alternating between green, gray, and red, very clearly telling us sideways market. Now, if you look at the current trend filter, it's green. So it's telling us the start of a bull trend, but it's below the 200 SMA. The 200 SMA is a very good level of resistance that could push the market back down. So what you could see at this level is the market just starts dropping. For it to start moving up, we need to see it move up. Always let the market dictate, never predict. Patience is very much a virtue. And as I've shown you stocks that are outperforming Amazon, Hubble, Quanta Services, Arch Capital Group. So that's the art of building a portfolio, is to invest in the performance, not the ticker symbol. If you invest in the ticker symbol, you'll regularly end up in the wrong stocks. So that's where an edge comes in. That's where the toolkit comes in. These were all really important moments of realization for me in the early days. Don't focus on the ticker symbol, focus on technical analysis and performance. Build a toolkit that can help you do that. All right, and then on a daily, just a quick analysis. Yeah, okay, starting to move up, early signs of a trend, but we don't have that alignment. The weekly is below the 200, the daily is above the 200, the monthly is in consolidation. So just a quick example of how within, look, what is that, 30 seconds to a minute? We've looked at Amazon and God, that's not a good stock. That's how quick your analysis should be. If you find yourself staring at a chart, you're looking for a reason. And often when you look for a reason, you end up on the wrong side of the trend. I hope that helps. Can you hear me, guys?
Oh, yeah, that looks good. I guess maybe we can pull up one more of the examples that he asked for. How about
that's Ryan. Okay, lovely, Ryan. So we've gone through okay, Adobe plug power. Okay, let's have a look at Adobe. Let's see what Adobe is doing. I used to work in photography back in my mid to late 20s. So, you know, Adobe is a stock that I do sort of tend to look out for, just because I've got a bit of a history with the software. Okay, again, Adobe, if you look at it, it's trading between the high and the low of last year. Yes, it's trending to the upside, so you may want to consider an early entry, but the risk of an early entry is that you can get stuck in this period where it just moves sideways. So, and what I mean by that is that the market could come up and it looks very interesting, and then suddenly it starts dropping, and then it just remains in this sideways market for months and years on end doing nothing. So, you know, the question is, what is the risk to reward? Is it worth the risk to reward? For me, it isn't worth the risk to reward, because there's so many other better stocks that are already trending. Now, the weekly is looking better than Amazon because it's above the 200 SMA. The trend filter is green. Notice as well, it's below this level of resistance. So you can see how well our resistance levels work. So if you want to consider an entry, at the very earliest, you want to consider an entry above this level of resistance, because again, this could force the market back down again. Also, it's a very expensive stock. It's around $500. I tend to look for stocks that are cheaper, $100, around $100 mark, $100 to $200 mark, because you get more bang for your buck, and also the upside potential. I mean, you know, Amazon could, Adobe could move to $1,000. Of course it could. Amazon's proved that. But cheaper stocks, they'll cover ground quicker. You'll get more value for your money. You'll make more profit. So I tend to focus on the cheaper stocks. Daily, above all three moving averages. The trend filter is green. So yeah, it's looking interesting. If I had to choose between Amazon and Adobe, I would absolutely choose Adobe. But again, if I had to, I'd choose Adobe. But ideally, I wouldn't choose either of them, because they're better looking stocks.
Yeah, it looks like we have like a couple thank yous that came through on the YouTube and GoTo webinar, but
yeah, you're welcome, guys.
I'm not seeing any other questions.
So I just want to finish by saying, please connect with me on LinkedIn. I'm quite vocal on LinkedIn. I don't know if some people hopefully may have come through LinkedIn, because I shared the link on LinkedIn earlier. If you're not on LinkedIn, connect with me. Search for my name, Zahir Anwari. And if you want to email me, you can email me at zahir@sublimetrading.io. So just my name, ZAHER, zahir@sublimetrading.io.
Fantastic. Well, yeah, thanks again. I mean, you always do a great job presenting. I feel like you're very knowledgeable in the space, and we were happy to be able to have you on today.
Appreciate it as always, Bobby, and looking forward to to doing more. Thank you.
Yep, of course. Have a good night.
Thank you. Cheers. Bye-bye.
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself, who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.